What up, Velamut Babap, Kolomima, Limanyana, you shut up. Once again, ladies and gentlemen, it's on Boy Novel Timene, and thanks for tuning in this weekend's market review with me. So, in this weekend, the indices or pairs are going to look at, going to focus basically on our index, which is our dollar index, and gold because they are the only things that we traded last week and like we had anticipated or catered for. So without wasting any time, let's get into DXY and like now we're going to highlight some of the mistakes we did while analyzing that resulted in us not getting the results we had anticipated, you see. So now, first things first, what we had anticipated is that because now we realize that here after this impulsive movement we had this consolidation, and without within this consolidation we had something like a bearish flag, and for a bearish flag to be completed we have to get a confirmation of an end of a retracement. You see things like bearish flags, they are retracements. So now for this bearish flag to be ended we had to get a confirmation of things like here we had anticipated that the price was going to give us what? The price was going to give us double tops, then price goes down. But now the price failed to do that. That is first error that we did. And I'm going to highlight what happened for us to not get that uh, conclusion we had anticipated or the results we had wanted. First things, for us to initiate that, let me show you the reason why the price didn't go our way. The reason is that let's go to one daily time frame. What I've seen, what I think was the problem is that if you look at daily time frames, this daily time frame, you can notice something that if you can start focusing from here to there, the price now was within a range bound market. You see, the price was within a range bound market, which was trading horizontally between our supply and demand zones. And yet it was not raining between our supply and our demand zones. And like here we had so many touches, so many touches, so many touches, so many touches. But now, if you can realize if this is really a resistance structure, resistance or support structure, we say a level is a resistance or support structure only if we had more buying opportunities or interest or more selling interest, trend reversals, or multiple confluences, which is many events occurring at a single point, which is multiple confluences, many things occurring at that same level, you see, which is here we had a lot of trend reversals, you see, trend reversals. So now what we failed to look at was that prior to what we had here, the price had given us the price had given us a bullish flag with a confirmation of, I need to see things like bullish flags, they are retracements, and a retracement is a pullback. And yet, therefore, bullish flag is a pullback. Therefore, we had impulsive movement, retracement, then a continuation. Therefore, overall now, if you can starting looking from here to there, we are within a bullish movement. So we fail again to realize that we are within a bullish movement. And now so we're within in this is impulsive movement retracement, then we're anticipating a continuation. Now let's get into it. Look what's happened. Price gave us this impulsive movement, it retraced, then a continuation. Now, our mistake was that we didn't take into consideration that we're within a continuation movement, and yet, therefore, we're within a continuation movement. We didn't realize that at first. That we are within a continuation movement. So our error was that we wanted to stop the price here. You see, so we wanted to say that now the price is finished, it's now retracing, no, not retracement, reversing. You see, but we had forgot that the price now was within a continuation period or type of a movement, and that the only way that a continuous price, the only way that a continuous price is gonna stop is when we okay no I phrased it badly. This is it. You take your profit at our resistance or support structure. You see, know that you take your profit at a resistance structure at a significant level to pay to say it. You see, now our first mistake was that we forgot that we are overall within a bullish movement, and like look, you see where price had broken, and again, if you look at the 4 hour time frame, look at this. Now, if you consider candlestick patterns, let's for if you consider the candlestick patterns, we can see that there was a confirmation of price still going up. There was a confirmation of the price still going up. Look what happened is that the price continued, then retraced. After that retracement, what we had, what did we have? We had an evening star. You see, we had an evening star. This is an evening star, and things like evening stars they signify an evening star that occurs at the end of a retracement signifies trend continuation. Therefore, that was it, and that was the end of a retracement. You see, price retraced, had an evening star, then went up. You see, as soon as the price broke this resistance structure, which is our previous high, if you can look at it like which is our previous high, we saw that the price was going up, and now the price was now headed to our area of significance. You see, our that was our first mistake that we did. We didn't consider the chart patterns and the candlestick patterns. That was the first mistake that we did. And this was the XY. Now let's look at gold. What happened to gold? Now starting things with gold again, everything with gold went awesome. I'm proud to say that everything with gold went awesome and it went our way. But now there are minor things that could have costed at us, or we didn't like clarify, or let me say we learned from some things, some movements that we saw later after we had uploaded the video that oh, this is what happened here. Now look, starting things. Remember that here we had something like a gap. We can see that the price was so undecided at this level that we had anticipated the price was gonna go back here before retest this level because before it goes up, which it exactly did. You see, now price went back. Then our first confirmation, if you are a trader and you consider things like trend reversals, no, not trend reversals, candlestick patterns, you could have seen that the presence of a hammer here, the presence of a hammer. Okay, firstly, sorry, let's start with what we had anticipated. Firstly, we had anticipated that the price was here. We had anticipated that because now, if we can just do, we had anticipated the price was gonna come back here, was gonna come back and then come back here, had a pullback because now let me put it right. We're within a consolidation period. And yet we had an impulsive movement, and after impulsive movement, we expect that a consolidation. Impulsive movement, consolidation. And yet, so our consolidation was like because now we were here, we had anticipated the price was gonna come back and test this level here before it consolidates, before it breaks our resistance structure. You see, before the price breaks our resistance structure, it will consolidate a little bit further or a little bit before it breaks. The price gave us that was like the price. Sorry, I don't know. We had anticipated the price was gonna come back here before it breaks. You see, giving us here things like double tops before it comes down. You see that kind of movement, but failing to understand that we didn't realize that we had a what a shooting a hammer. Sorry, we had a hammer here, and the presence things like presence of a hammer at the end of a retracement, they signify that trend continuation. We have to remember that. And if this is a candlestick pattern in our 4 hour time frame, it is I'm telling you, it is indeed a candlestick pattern again in a what? In a 1 hour time frame. You see, this is a hammer in here. Now, let's go to 1 hour time frame and show. It is a candlestick pattern that shows that this trend, this retracement is over. Look, we had a harami. We had a harami candlestick pattern, which signifies the end of a retracement period and the beginning of a trend continuation. You see, and make sure that, remember, we do not enter our trades at the beginning of a retracement. You see, we do not enter our trades at the beginning of a retracement. We enter our trades at the beginning or at the end of a retracement. Because now, if you enter your trade here, your stop loss is here. The price comes down, it hits your stop loss. You see? Therefore, we enter our trades at the beginning of a trend continuation, which is at the end of retracement. So this is what we had anticipated, and then after the price went our way. You see, now we had anticipated because the price was going to give us a double top. We had anticipated the price was going to give us a double top, then come back down here because now we had strong movements at our demand zone. We will say we had anticipated the price was going to come back to our demand zone. Why do you call it a demand zone? Remember, we call it a supply or demand zone if we had the price it's a lot to that level and if we have strong movements at those levels. You see, I don't know if my anticipation or my review was not that good, but I hope you liked it, and that is what you had anticipated. Thanks for tuning in, and once again, ciao. Thanks for tuning in.